This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices gained on Friday as U.S. buyers covered positions ahead of the three-day Memorial Day weekend amid worries over the latest round of nuclear talks between American and Iranian negotiators. Brent crude futures settled at $64.78 a barrel, up 34 cents, or 0.54%. U.S. West Texas Intermediate crude futures finished at $61.53, up 33 cents, or 0.54%. I think there is some short covering going into this weekend, said Phil Flynn, senior analyst with Price Futures Group.
U.S. energy firms this week cut the number of oil and natural gas rigs operating for a fourth week in a row, bringing the count to the lowest since November 2021, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 10 to 566 in the week to May 23. That 10-rig reduction was the biggest weekly decline in total rigs since September 2023. It was also the first time since September 2024 that drillers reduced the number of rigs operating for 4 weeks in a row.
Moving on to the top news in the energy sector.
U.S. President Donald Trump on Friday ordered the nation's independent Nuclear Regulatory Commission to cut down on regulations and fast-track new licenses for reactors and power plants, seeking to shrink a multi-year process down to 18 months. The requirement was part of a batch of executive orders signed by Trump on Friday that aimed to boost U.S. nuclear energy production amid a boom in demand from data centers and artificial intelligence. Licensing for reactors in the U.S. can take over a decade at times, a process designed to prioritize nuclear safety but which has discouraged new projects.
Spot premiums for Murban crude have hit 6-month lows on surging supply as the United Arab Emirates ramps up output following OPEC+'s decision to accelerate production hikes and compete head-on with U.S. shale oil, traders and analysts said. Asian buyers are flocking to the flagship Abu Dhabi light grade on low prices, with a record 10 million barrels of Murban traded on the S&P Global Platts market on close, mock, process this month. Cheap Murban crude is also squeezing U.S. West Texas Intermediate oil out of Asian markets. Murban became the cheapest among a handful of medium sour crude grades that can be delivered during the Platts mock process that sets the Dubai benchmark price, market sources said, leading to record deliveries on the platform this month. Next, we have the top news in metal markets. Major Russian exporters including Rusal and Gazpromneft have cut the planned volume of commodities like metal and oil products they send by rail. A Russian railways document seen by Reuters showed the latest sign of subdued demand as the country's war economy slows. The state-owned rail monopoly intends to reduce 2025 spending by an additional 32.5 billion rubles, $408 million, or around 3.5%, to 858.4 billion rubles, due to the revised cargo forecast, according to the document dated March 20. It had already planned to spend 40% less on investment this year than in 2024 in the face of soaring interest payment costs. Its cargo volumes, which hit a 15-year low in 2024, are a useful gauge of the manufacturing health of Russia's export-driven economy.
Platinum prices surged to a 2-year high on Friday, propelled by a sharp rise in Chinese imports, persistent supply concerns, and renewed investor interest in the metal used in catalytic converters, jewelry and electronic items. Spot platinum rose to its highest level since May 2023, to $1,096.40 per ounce. The metal is up 20% so far this year. The fundamental support stems from the prospect for a third annual supply deficit and reports of increased demand for bars, coins and jewelry in China as investors cast their eye on cheap platinum relative to expensive gold, said Ole Hansen, head of commodity strategy at Saxo Bank.
We will now look at the top news in the agricultural sector.
Chicago corn and soy futures eased on Friday ahead of a long weekend in the U.S. as President Donald Trump posted on social media that he recommended a 50% tariff on goods from the European Union. Wheat also fell as buying slowed after a rally earlier in the week, according to analysts. The most active soybean contract on the Chicago Board of Trade was down 7.75 cents at $10.59 -3/4 a bushel by 11:22 a.m. Central Standard Time, 16:22 GMT. Corn fell 4 cents to $4.59 a bushel, and wheat dipped 5.75 cents to $5.38 -3/4 per bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.